If you've been following the channel for a while, you know that I like buying companies on a dip, and one company that is on a major dip is none other than Intel, down almost 50% in the last year. However, just because a stock is on a dip does not mean that it is undervalued. So today we're going to go over the troubles going on at Intel, and I'm going to give my opinion on whether Intel, AMD, and Nvidia are a buy, sell, or hold. And as always, thank you guys so much for the continued support on the channel. If you enjoy this type of video, drop a like down below. It helps promote the videos out there and get more people watching them, and subscribe if you haven't yet already. And the best way I can give back to you guys for continuing to support the channel is by being open and transparent about the moves that I'm making in the YouTube portfolio. This is that portfolio. It's currently sitting at a value of $61,809.57, down a little bit from its all-time highs of around $66,000. And to be transparent, I do not own Intel across any of my portfolios. Within this portfolio, I do hold Alibaba, Google, Apple, Microsoft, Palantir, PayPal, SoFi, Super Microcomputer, and Visa. And out of these current positions, the ones that I'm paying the most attention to right now are Google and Microsoft. These two stocks are on a dip, and I could potentially build out these positions a little bit more because they're relatively small right now. At one point in time, Intel was a prominent dividend company, and within this portfolio, I do hold two dividend ETFs, SCHD and VYM. SCHD, I plan to sell out of at some point over the course of the next year. I bought this ETF back in 2022 when a lot of dividend stocks were on a dip, and overall that's turned out decent. However, I would get better returns by investing this money into individual stocks. So that's what I plan to do over the course of the next year or so, sell out of this position and actually move that into cash, and eventually start putting this cash into the market if we see a large dip. One stock that is definitely on a dip is Intel. In the last year alone, the stock has dropped by almost 50%, and now over the last 5 years, the stock is down by almost 60%. You have to go all the way back to 2013-2014 time range to actually find prices that are similar to where Intel stock is trading today. And there are two main reasons we are seeing this dip in Intel stock price. The first is competition coming into the market. That is very obvious. We've seen players like AMD and Nvidia come in and take significant market share away from Intel. However, the second reason we are seeing this dip is because the company is investing heavily into their foundry business. Intel Foundry was Intel's plan to bring chip manufacturing to the US. Currently, there are two main players in semiconductor manufacturing. It is Samsung and Taiwan Semiconductor, and those two companies are primarily located overseas. We have seen Taiwan Semiconductor start building facilities in the US. However, Intel was focused on trying to become the #1 player in the US. And it appeared that Intel was well on their way to achieve this goal. They had everything going for them in the right direction. They had US support amongst a lot of prominent leaders. Not only did Joe Biden support the plan for Intel to bring chip manufacturing to the US, but we have even seen Donald Trump talk about the potential of increasing manufacturing of these critical chips in the United States. However, today this plan appears to be in question, not only from people outside of the company, but from the actions that the company is taking themselves. Back in December, they got rid of one of the prime advocates for the foundry business, who was their CEO, Pat Gelsinger. And today we are seeing them actually delay the opening of one of their plants all the way out to 2030. And keep in mind, this is one of the plants that they showed off to Joe Biden back in 2022 when they were vying for political support for the CHIPS Act. With them delaying the opening of this plant, it now calls into question whether they will actually receive money from the act. And the vice president and head of global operations for Intel Foundry Manufacturing released the following statement after the announcement of the delay. As we continue to invest across our US sites, it's important that we align the start of production of our fabs with the needs of our business and broader market demand. This has always been our approach, and it allows us to manage our capital responsibly and adapt to the needs of our customers. Personally, if I were an investor into Intel, I would find this statement very concerning, because basically what they are saying is that they are not seeing the demand for chips to actually justify the opening of this new facility, not only as Intel as a business, but potentially across the broader market for chips. And the other negative to all of this is that they say they are adapting to the needs of their customers. However, what this could ultimately mean is that they don't have enough customers to actually support this new facility. We do know that a couple of Intel's customers are Microsoft and Amazon. However, recently with the company struggling, they have actually outsourced some of their production to Taiwan Semiconductor. This overall is very concerning because at this point, why wouldn't Microsoft and Amazon just go directly to TSM for their manufacturing needs? And because of this, as well as the other struggles we have seen around Intel, there's rumors that TSM is considering buying the chip manufacturing segment of Intel, with Broadcom actually buying the product segment of the company. That is obviously purely speculation at this point. The only thing we do know is that Intel has struggled significantly on both their top and bottom lines over the last couple of years. They reported their last earnings on January 30th, and they did come through and beat analyst expectations on both their top and bottom line numbers, reporting EPS of 13 cents and revenue of $14.26 billion. Even though they beat analyst expectations, this isn't a substantial move in the right direction. They are still seeing the revenue fall year over year, down 7.4%. And now if we look at Intel's trailing 12-month revenue, it is sitting at $53.1 billion. The last time we saw numbers this low, you have to again go back to 2014. And in terms of Intel's bottom line numbers, they have been consistently inconsistent. They have been bouncing between negative EPS quarters and positive EPS quarters. Prior to 2022, the company was consistently putting up $1 to $1.25 of EPS each and every quarter. However, more recently, that has not been the trend. The company has not been able to find a consistent basis where they can consistently show profitability. And a lot of these poor results are being driven by Intel Foundry. Over the last 4 quarters or so, they have put up around $4.5 billion of revenue from their foundry business. This is very deceiving though, because this revenue is primarily being driven by other segments of Intel's business. And this creates 2 major issues. One, because it shows that Intel is not bringing in new customers to their foundry business. But 2, it also creates very poor margins for this business. Right now, they are consistently losing around 50% in terms of operating margins. Currently, it's a little bit difficult to actually value Intel's business because if you look at their forward P ratio, it's sitting at a 52.08. However, like we saw, they're bouncing consistently between being profitable and unprofitable based on the quarter. If we look at their price to sales, it's sitting just under a 2, and their price to book value is sitting just above a 1. If you compare these numbers to Nvidia, we can see that in terms of forward P ratio, Nvidia actually looks less expensive, sitting at a 28.25. However, Nvidia's price to sales is much higher, sitting almost at a 24, and their price to book value is also much higher, almost at a 40. And AMD is sitting somewhere in the middle. Their forward P ratio is lower than the other 2 companies, currently sitting at a 21.69 with a price to sales of 6.34 and a price to book of 2.81. In my opinion, when I look at these 3 companies, the one that I think is most interesting is definitely AMD. The valuation is there. There's a lot of potential upside with the company. I made a whole video about my bullish case on AMD yesterday. Go ahead and check it out if you want to see more detail around my thoughts on AMD. In terms of Nvidia, I think it is more of a hold. I think right now the valuation is a little bit more elevated compared to some of the other players in this market, and we could potentially see some pullback in spending on data centers that could affect Nvidia. So that's why for me, it's a little bit more of a hold. For Intel, I'm kind of borderline a hold or a sell. I just think this company is in such a tough position over the next couple of years, and they're in between a lot of different markets. They need to decide on what market they want to go after and then go full bore into that market. However, with all of that said, don't buy a company just because some random guy on YouTube talked about it. Make sure you are doing your own research and looking into companies that meet your risk tolerance as well as your time horizon. I hope you enjoyed the video. If you did, drop a like down below and subscribe for more videos like this one. And as always, have a wonderful rest of your day. And for the joke of the day, did you hear about the bossy man at the bar? Check the comments down below for the answer. Thanks for watching.